Good evening, good evening, good evening. Welcome to the Real Money Coach Show here on Tuesday evening, 8 p.m. Eastern Time. And I am glad that you are with me tonight. You are going to learn some stuff tonight, y'all. I promise you. It is a topic that I'm so excited about. Charles, thank you for joining us all the way from California. Love it that you are here each and every week supporting the show. Those of you who are in my close circle, my immediate circle, you realize that I've been talking about this thing called options for a minute, right? And I've been talking about it, and I've been talking about it, and I studied this thing for a year, and then I got hooked up with some people that really knew what they were doing about it. Justin, thank you for being here. Brad Hudson, thank you for being here, watching, listening to the show. And I do want to remind everyone that I do want to remind you the Rainmaker is in the house. Janice Burr, all the way from Prince George's County, Maryland. Thank you for being here. Janice, I think you're going to like this because you are an investor. You are the Rainmaker. So I'm really excited because I've been studying this thing. And actually, as I see Janice, and I want to remind everyone about the Generational Wealth Alliance that takes place every Thursday on YouTube, or not YouTube, but Facebook and Zoom. That is hosted by Janice, the Rainmaker Leak, myself, and Dr. George Frazier. Mr. Boggs, thank you for here. Mr. and Mrs. Boggs, Alice Martin, thank you for being here. Timothy Day, thank you for being here. We have all you wonderful people. Thank y'all for checking in too, letting us know that you're watching, that you're listening, that you can hear us. And if you happen to, Elijah the King, all right, Elijah from Palmetto Beach, thank you for being here. Listen, if you're listening to this as a podcast, just reminding everyone that this is available on all podcasting platforms. Matter of fact, I am going to drop in the chat. I am going to drop in the chat the link. It is called the Smart Link, right? The Smart Link. It is the link to our YouTube page that, not a YouTube, but our podcasting. So our podcasting. So this is actually the direct link to when we had Judge Elisa Chengary on. Got a lot of great feedback about that show. So that's a link. But if you go there, you'll be able to subscribe to us. That'll bring you up Apple, Pandora. Dante, thank you for being here. Apple, what else? Pandora, Google, all the podcasting platforms, and you can subscribe to it. But if you really want to know my best way, the way I really love for you to connect with us is through the YouTube channel. Listen, by the time we're done tonight, if you subscribe to our YouTube channel and you subscribe to the YouTube channel and you tell everybody you know to subscribe to our YouTube channel, we'll be blowing this thing up. So I'm excited about it. I'm also excited today. I spent some time at the radio station as I do normally on Wednesdays, but I was there today. And my wife got the chance to go with me and my grandson. We had a great time at the radio station. And I was interviewing a lady named Alexandria Johnson Boone. And she is the executive director of the Power Networking Conference. And she's been executive director for the Power Networking Conference for, or executive producer. And she's been doing that for 20 plus years. So she was in the radio station. We're talking about the radio. We're talking on the radio about the Power Networking Experience and Expo. You do want to make sure that you come and check it out. If you go to powernetworkingconference.com, and if you want an exhibition booth there, then you can get that. You can buy your tickets. The tickets normally are, $1,400 for adult. They're down to $880. But with my discount code of TRMC 2024, that would knock 32% off of your booth. If you get a booth, it'll knock 32% off of your ticket if you get a ticket. And that ticket also includes one ticket for a young person, a youth between the age of 17 and 25 So make sure that you get your tickets. Wednesday, we're just 90 days away from the conference. So we need you to show up and show out, get your tickets. Sharon Harper, thank you for being here. Let me do this. Let me bring on my co-host on with me tonight. And you guys know her as Michelle Mitchell of Mitchell Consulting. Michelle, how you doing?
I'm good, Tony. How you doing tonight?
I'm doing good. I'm doing good. I'm on spring break.
I know. I will be on my spring break in 2 weeks. So
In 2 weeks. Tell me
yeah,
what you're doing in 2 weeks.
going out the country.
Ah,
Gone.
okay. That's
Yes.
what I'm talking about. Uh,
Yes.
we'll have to exchange notes because we leave in the country too in
I know.
2 weeks. So Michelle, I'm excited about tonight because I've been talking to you guys. I've been talking to
Yes.
Tony. I've been talking about how excited I am about options trading, and in
Yes.
particular, the way we're going to talk about that we do it tonight. There's many ways to do it. I like the way that you're going to learn tonight. We got Errol. He's been one of my mentors in terms of this. And we actually met at Dr. Boyce Watkins' conference in Atlanta last fall. He attended my workshop. We connected and have been connected ever since. And by the way, those of you, Dr. Boyce Watkins will be at the Power Networking uh, Expo and Experience as well. So, and then we have a couple other people. We got Jennifer Hudson's going to be there. We got
Oh, nice.
Master P's going to be there.
Nice.
Some other celebrity folk are going to be at the conference. Michelle's going to be at the conference. I'm already claiming that Michelle's going to be at the conference.
Yeah.
She can't stay out of Charlotte, no way, right?
I know I can't.
So, anything else going on, Michelle? Anything new happening with you?
Anything new? Did I tell you that we got our WeBEC certification? Did I tell you that?
No. What? Oh no, you didn't
Yes.
tell me that. So,
Women-owned business certified.
women-owned business certified. That's what you guys call it in Michigan.
I think that's what it's called. WeBEC.
Because we normally say
WeBEC.
we say WSBE, women, minority, and small business enterprise.
Okay, gotcha.
They kind of put it all together
They put it
here.
all together.
They
Yes,
lump it all together. So
this
yeah,
is just women. So
right.
yeah.
Well, what you normally do is you qualify one or the other. I mean, you
Yeah,
can't qualification
exactly.
all three, or so. Well,
Right.
congratulations. That's a big
Thank
deal.
you. It is. It is a big deal. Yeah, had my orientation today. So yeah.
Awesome. Well, Michelle, there's a couple things that's going on.
Mhm.
Obviously, this is April, so it's Financial Literacy Month, and
That's
that's
right.
part of the reason I'm really excited about this tonight too, is because this is financial literacy that we're going to talk about tonight.
Mm-hmm.
And the other thing is, as I reminded people on my Money Minute on the radio today, it's almost tax time, and
It's
so
almost tax time.
so
Mhm.
people need to, I mean, you're getting to the point where if you ain't filed, I mean, depending on your business, you might be looking at an extension and all that. And I'm
Right.
reminded, especially as I see my friend Timothy Day there,
Yeah.
he reminds people that it's an extension to file, not an
Yes.
extension to
Extension
pay.
to pay.
Right.
Exactly.
You still
Yes.
got to send that check in.
That's right.
Send that check in. So
Send the check in.
Uncle Sam wants his money,
He
right?
got to get his cut.
He's got to get his cut. Now,
Yeah.
we always talk about don't leave any money on the table.
Right.
He's expert at that, right? You don't want to leave no
Right.
money on the table. Well,
No.
listen, let's take a quick break, show our couple commercials, and we will come back and tell you how to connect with us. And then we will bring our special guest for the evening on, Mr. Errol. So without any further ado, let's roll the commercial.
Imagine a life where financial wellness isn't just a dream, but your reality. Welcome to a journey where increasing, protecting, and dominating your money becomes the new normal. With the Real Money Coach, embark on a path towards legacy wealth. Your financial future is not just a matter of chance, it's a matter of choice. It all begins with your free financial wellness checkup. Join us at the Real Money Coach and discover the steps to secure a legacy of wealth for your family. The keys to true financial freedom are within your grasp. Let's build that future, starting now.
Do you have passion for your business but feel like your finances are falling short? Running a business takes more than a great idea. It takes a solid financial plan. Mitchell Consulting can help you turn your passion into profit with their financial advisory services. Get the financial guidance your business needs. Contact Mitchell Consulting to learn more about their passion to profit capabilities.
All right, passion to profit, Michelle. That's you right there, right?
That's me.
Your branding. So, how do people who are listening to this as a podcast, how would they connect with Mitchell Consulting so that they can turn their passion into profit?
Yes. So you can go to our website at mitchellconsultingservice.com and click on the pop-up and join our financial empowerment roundtable. It's free. And you can get your financial literacy, for your business. So
there you go. There you go. A couple more shout outs here. We got Antonio Mitchell, you know that guy. And
I know
then
him.
Dr. Liddell from Mississippi, West Point, Mississippi is in listening tonight. Thank you for being here, Dr. Liddell. And if you want to connect with the Real Money Coach, you can just go to therealmoneycoach.com where you can get your free financial wellness checkup. And you ought to do that since this is Financial Wellness Month, Financial Education, Financial Literacy Month. And the other thing I want to tell you is this, and this is huge, is you also can find out right there on the website how much your retirement tax bill is going to be. Because you really want to know what's coming down
the pipe,
right? This train wreck we call taxes. So make sure you do that. Simply go to therealmoneycoach.com. Now, without any further ado, I'm going to bring on our special guest tonight. I think he is a masterful trader in the area of covered calls, and we're going to talk about exactly what that is. Okay. And so let's bring Errol onto the stage. Errol, how you doing?
Peace, Tony. Peace, Michelle.
look like I heard you typing. You making a train. What's going on?
Well, to be honest with you, my style of trading is more hands-off. I do more waiting than I do trading.
Yeah, and I love that. I
like
because, that. I do my trades and then I just wait. I just wait till the call day comes and we see what happens, and then I just do another trade for another, whatever. And I have my certain goals. I might talk a little bit about that later. But Errol, tell everyone a little bit about your background and maybe how you got into trading, and then I know you're going to share some information with us in terms of a couple slides, and then we'll into some more questions. Now, I want to encourage the audience to do this as we get to the slides. When we get to that point, he's going through it. If you have some questions, make sure you post them in the chat. We're going to try to answer as many of your questions as possible as we go through this topic. So, Errol, tell us a little bit about yourself.
Sure. I've worked in finance the last 15 years. So over the years, I've held all kinds of positions. Budget officer positions, analyst positions, financial manager positions. Currently, I work in the private sector as a finance manager. So I do that 9 to 5, but my main revenue stream is killing these options.
I love that, killing these options.
He said killing these options, right?
So maybe the last a year and change, options has turned my day job into my side hustle. I originally got into options about 2 years ago. I was dabbling here and there before that, but looking back on it now, I realized that the mistake I made years ago was I was on the buying side.
Mm.
So the last couple years, I've mastered the selling side, and it's much more lucrative, and it fits my investment profile much better.
It kind of fits your philosophy a lot better. So if you're watching and you want your 9 to 5, your day job to be your side hustle, just
Exactly.
put it in the chat. Put side hustle, right? Put side hustle. Put a money bag or something. If
That's
that's what
right.
you do. That's what I'm talking about. I'm talking about making your 9 to 5, what is your main gig now, your side hustle. That,
Yes.
that that sounds pretty appealing to a lot of people, Errol.
Mhm.
So
Yeah, that's the real graduation. Um, my next phase of graduation is really just trading full time. But when I say trading full time, I don't mean 40 hours. I don't mean 20 hours. I don't mean 4 hours. I might mean 1 hour a month at most. So I will make. Right now, I do make a full time salary trading, but I still work a day job.
Mhm.
gotcha. As your side hustle, though, that's your side
Mm.
hustle. So, why don't we do this, man? Why don't we jump into your slides to kind of give a little bit of orientation, if you will, to the people who are watching, and I think that will help as we have the discussion the um, about all the different things that we can talk about as it relates to the calls and covered calls and all that kind of stuff.
Okay, sure. Let me pull these slides up. Let's see here. Okay, so what I noticed a few minutes ago was the format switched since I uploaded it. So bear with me. We're going to do the best we can. Just a quick disclaimer before we get into the detail of today's meeting. This won't be investment advice. Of course, you're going to perform your own research, and this is primarily for educational purposes only.
And if you saw my post on social media and email, there was a disclaimer on that too for that same.
All good, Tony. All right, so this is just a brief overview of options. Um, what I like to do is present the seller's perspective. So that's what we'll focus on. So what I mean by the seller's perspective is selling puts and selling calls. We're going to focus on those two strategies today. All right, just a little bit about my background. I did go the traditional route. I did do traditional education. I got a couple degrees, but more importantly, I invested in my freedom education. Both of them were valuable. Both of them, I did learn a lot. Both of them provided me great networking opportunities. So I'm glad I did both.
Mm.
And I do want to say the Black Business School is Dr. Boyce Watkins Business School, and the Prime is what we're both in. We're both in the Prime. And those of you maybe following multi-family movement, Julian Gordon has been kind of a pioneer in that multifamily movement in terms of income property.
Yes, sir.
Mhm.
Yep, Julian. Every time I meet Julian, I always give him credit. Between his class and Doc's class, uh, between those two classes, I achieved financial freedom.
Wow.
So every time I see them, I give them credit. All right, let's get right into the detail. Feel free to take a screenshot of this or a picture of this screen. If you don't understand these two basic strategies, just study this content, meditate on this content, and eventually it'll sink in. So on the left, we have the covered call, and on the right, we have the cash secured put. Each of them uses different collateral. On different days, one will give you a higher premium than the other. On green days, the covered call will give you higher premiums. On red days, the cash secured put will give you higher premiums. On the covered call side, the seller agrees to sell at the strike price. And on the cash secured put side, the seller agrees to buy at that strike price. The two different strike prices, is a potential exit and one is a potential entry. In both strategies, you collect premium upfront as the seller. And then on the covered call side, you always want to pick a strike price that's above your average cost. So for any real estate investors on here, you always want to sell your property at a price higher than you paid for it. All right, let's move on to the next slide. So here are a few example trades. Depending on your risk tolerance, you may be a conservative trader, you may be a moderate trader, or you may be a more aggressive trader. So here's a example trade for each of those scenarios. I specifically put puts on all three trades today because you may know that the market was red today. So on a red day, you get higher premiums when you sell cash secured puts. On the Apple trade, one contract Apple 165 strike price, about 1 month out expiration, approximately 16,000 cash collateral. That'll give you about $300 return, and that's just under 2% return. For my moderate traders, you can trade one contract of Amazon 175 5/3 expiration. That'll cost you about 17.5 cash collateral. Cash flow about just under $500, and that'll be at about a 2.8% return in 1 month. Then you've got more aggressive traders. So take a look at Mara. Consider trading Mara. Here's an example for you: 19.5 strike price, 1 month out, $1,950 collateral, cash flow about $264, and that's a whopping 13.5% return in 1 month. And the thing I like about option trading is that you can scale very easily, right? I'm using one contract in each of the three scenarios, but of course you can sell 3, 5, 10, 25, or 100 contracts. If you do that, you'll multiply your cash collateral by that contract amount, your cash flow by that contract amount, but your ROI will be the same. So that's one of the main reasons I like selling options, because of the ability to scale. So feel free to take a picture of this and study this content. All right, I'm almost done. We will run through these last couple slides very quickly. I'd like to mention that I host a free online monthly meetup. We meet the first Sunday of every month, 5:30 p.m. Eastern. We next meet this coming Sunday. On that meeting, we discuss strategies, trading psychology, overall best practices, and we discuss our actual trades. And if you'd like to get on my contact list, just email me, and here's my contact information. You can check me out on my website, errolseemangal.com. You can email me at errol@errolseemangal.com. You can check me out on LinkedIn and Instagram. That's it.
Cool. Well, let's do this, because I think there's some people that we need to kind of break some of this down. I mean, because we use terminology that a lot of people may not necessarily be, and we can get this scrolling across the screen too here in a second, your contact information. But I know there's a lot of people that maybe, okay, what is trading options, and what is a call, and what is a put, all those types of things. Right. So as we go through this, Michelle, what question do you have? Did you have one?
Yeah, I was just thinking about terminology first. Like, let's go to basics so our audience can understand, what's the difference between a call and a put, and collateral and all that. So
okay. So one of the things, Errol, that I think we should explain is that when you are selling or you're dealing with an option contract period, it's how many shares?
100 for one contract, 200 for two contracts, 300 for three contracts, and so forth.
So whenever you say you're trading an option, that means that you have 100
Multiple.
shares of that particular stock.
Ticker. Yeah,
Yeah.
exactly.
Of that ticker. So if you said you're going to trade 100 shares of Apple, and Apple's what, $165 a share, that means that you own 100 shares of that stock. And that's the way we do it. I know there's a lot of people that do things called naked calls and all these other things that are a little bit more dangerous than our approach, because we own the stock, we own the underlying collateral, and all we're doing is making money off of that.
Correct.
Mhm.
Yep. If you don't own the shares, one thing you could do is sell a put. So Michelle was asking what a put was. A put is just assuming that the price may go down, and the call is the exact opposite. The seller may assume that the price of that ticker will go up.
But the key is on the calls that it's a covered call, right? So that means you own the shares.
Yes.
So
Yeah.
you're assuming that it's going to go up. So you're or you're assuming it's going to go up some. You may not want it to go up all the way, but you're assuming that it's going to go up.
So
And
that's where sometimes I like to make a distinction.
go ahead.
If your objective is to maximize cash flow, maybe you sell a near the money. You choose a near the money strike price. So if my objective is to maximize cash flow, current price is right here, I choose a strike right here to maximize cash flow. Now, if I choose a strike price here, like what you just talked about, Tony, I'll collect less in premium up front, but there's less of a chance my shares get called away.
So let's talk about that. Let's break that down, okay? Because this is interesting, and we're gonna try not to get too geeked out on you guys tonight, right? Okay, so when we talk about the strike price, when and let's just say I'll just pick one. I trade Martyr too, right? Martyr too, but let's just say you have a stock that's a $25 is selling for $25 a share today. Right. And what you're doing is you are selling, I'm going to sell a contract to someone who's going to buy it, right? That they can buy that at an X date for $30 a share. So when you do that, your strike price that we're talking about is that $30. And so when Errol says that your stock may get called away, if that stock gets above the $30, then whoever bought that from you, because what they did is they bought the right to buy it from you at that price.
Correct.
So if it goes up to $50 a share, they can exercise their option and buy it from you for 30.
That's right. The seller is obligated to sell at the strike price.
Yes.
Absolutely. And you know, one of the first trades I got in, I just, man, it just, the Lord was good, because I bought it at a low price, like maybe $30, and it went up to over $90 a share. So
Wow.
yeah, now I didn't get all of that, right? Because I had the contract at whatever it was, but I did make that money. So Errol, my philosophy has been, I want to make 5% a month, right, on my money.
Okay. Yep.
And so when I do it, I'll look at a stock, and when we talk about a premium, that's how much they're paying you to be able to buy that stock at that lower price for you.
That's right. So when you hear the word premium, just think revenue. If I'm the seller, I'm collecting my revenue.
Yeah. So you're collecting that money, and then it's yours. That's your money, right? So you keep that, and then if it gets sold away, then it gets sold away. So what I do, Errol, my method works for me. But what I do is I said, okay, if it's a $25 price, if I pay $25 for it,
Yep.
then the revenue that I want to make is 5% of that $25.
Okay.
Okay. So then I know that I made my 5%. And then what I do with my strike price is I'll pick a strike price that is also at least 5% more than what I paid for it.
That's
So,
right.
so my worst case scenarios, I make 5%. My best case
Best case
scenarios, I make 10.
Yes.
That's right. So what you could do is take that $25, multiply it by the 105%, whatever strike price is slightly above there, or what strike price is closest to that 105% of the 25. That's the strike price you would choose to
That's what I,
lock in your 5% gain.
yeah. So I got a 5% for the revenue,
Mm-hmm.
and then I got a 5%, another 5% if it gets sold away.
Right. So that second 5% is what we call the difference.
Yeah.
If your
Absolutely.
shares get called away, then you'll make that the initial 5% plus that bonus 5%,
Right.
which is that difference.
Right. And that's what I've typically, and I haven't gotten into it. I'm playing around with little money, right? And what I found is normally, I'm like 7 to 10% a month is what I'm seeing.
What kind of returns are you putting up every month?
Like 7 to 10.
7 to 10% a month. You're in your first ballot Hall of Fame, Tony.
Yeah. But now I don't know how long I'm gonna be keeping this string up, but by doing it that way, I mean, and so the other thing for me, Errol, and I don't want to like dominate the conversation, is I only pick stocks that are $50 a share and lower.
Okay.
And the reason why I do that is because I got to buy 100 shares of them, right?
Okay.
And so I can keep my costs down. And I know people like to own Tesla and Apple. My theory is I can buy a whole lot of $25, $30, $40 stock for the same price that I can buy 100 shares of Tesla or Apple.
Right.
I understand the train of thought behind that. So one thing to keep in mind before you buy these shares outright is to look at their option chain. So before
Yes.
you buy these tickers that are $25 or $30, look at their option chain, see what kind of returns they provide, see what kind of open interest there is, see what kind of volume there is. If those things are satisfied, then you buy the shares. Then
Exactly.
you sell the calls.
Exactly, because I have my little rule, right? And y'all, I got my little spreadsheet. And so what I do is I look at the most volatile stock, and then there's a couple things I look at their 3-month trend, right? Has the 3-month trend been positive? And then I look at a year. And if both of those things are both in the green, then I then look at the stock, the options, and see if they have an option that meets my 2 criteria of being able to sell that for 5% and then also having a strike price at that 5%. And I'm willing to go out 30 days. But that's one of the things I want you to talk about, because when I was thinking about trading before I got into it and I learned about the covered options, I'm thinking people who, get up in the morning and they're got the computer on and they're watching the tickers and they're watching the candlesticks, that they call it. And I'm like, I don't want another job. I don't want another job.
Exactly.
I got 2 or 3 jobs already. I don't want another job, right? So tell us a little bit about your philosophy as far as that goes, because you mentioned that you more, I can't remember how you stated it, that you are a weight, or I can't remember how you said it, but
my general approach is set it and forget it.
there you go.
I do maybe 10 minutes worth of analysis. I do exactly what we just talked about. I'll pull up a ticker's option chain. I'll calculate the potential returns I can get. And that's maybe the majority of my quote unquote work.
Yeah.
The actual trade itself is a minute or less, right? So the analysis part of it is the bulk of my work. The actual trade execution is a very small fraction of my overall work. And the bulk of the time, I'm just waiting till expiration so I can do this all over again.
Yeah. I don't do a whole lot of research. And it's like, okay, what does that company do? I don't know. It just met my criteria for making my money, right? So we got a couple questions that came up. Elijah said, "What are your thoughts on rolling? When do you feel it's necessary, where you roll your position?"
That's a great question. You're not going to roll just to roll. You're going to roll for a net credit. So some of these platforms will show you the current market value of your position, of your option position. You would only want to roll if your net credit would be greater than your current market value.
Right.
So you're not going to roll just a roll. You're going to roll if it makes sense to roll. So as a general guideline, I'll roll at 90% of my. I'll just say I collected $100 worth of premium up front. I won't roll until it's my market value of that option position is $10 or less.
Now,
It,
go ahead, Michelle.
so if you're a newbie, like, where do you start?
The first step is really just understanding the theory of these two basic strategies: the cash secured put and the covered call. That's really the first step. The second step would be to get your capital base. Assume not everyone has a capital base, but the second step would be to build your capital base. But understanding the underlying theory is the first step.
Now I'm simple. I haven't done a put. I mean, I've been all calls, right?
So here's one thing to consider, Tony. Instead of buying these tickers outright, then selling the cover call, sell the put as a potential entry. If you get assigned, then sell the call.
Yeah, I gotta look into that really, and I'm doing a little bit of margin trading, not a lot, but a little bit there too. So margin trading, for those of you listening, is basically some of the platforms basically give you credit to buy shares of stock, even if you don't have the cash necessarily to do it. And so, but again, one of the reasons I like the covered calls is because, I mean, you're probably not going to lose your shirt on anything, right? Because even if it drops, the stock prices drop, you still own the shares. You can still sell your calls and puts on it. Now, my other theory is I wouldn't put more than 10% of my collateral on any one position. And that's how I can insulate myself a little bit.
That's one way you can diversify. Don't go too heavy into any one position.
And what we mean by one position, y'all, is one stock. So
exactly.
One stock.
That's right. Yep.
Yeah. So how did you tell us about? Because I think one of the challenges is getting the capital. What would you recommend a person do? How would you recommend? How did you do it? How did you gain your capital?
Listen, there's no shortcut in building up your capital base. I worked my day job every day. I side hustled every day. I did odd jobs here and there. I did whatever I could over the years to build my capital base. I did buy properties back in the day, about 10 years ago. I sat on those properties about 10 years. I was trying to close on some real estate. I was unable to close. So next thing I know, I'm sitting on a lot of cash. So I took that cash. By the time all that happened, I fully understood what I was doing in the options game. So I took all that cash, and then I started big boy trades.
Wow.
Yeah, you're doing big boy trade. I want to grow up and be like Errol. He's doing big boy trade. Right?
Right.
I'm still in elementary school, y'all.
We all start somewhere. But look, the bottom line is to get your capital base, do whatever is necessary. Work your day job, work your side hustle, sacrifice where you can sacrifice, cut back where you can cut back, and over time, if you do that long enough, you'll have enough capital base.
Yeah, because it's not a get quick rich scheme, because you got to build that capital base from somewhere. Right. And that's where you hustle, and you can invest with a lot of things you can do. So it says, if you're getting started, could you start with as little as 1,000? Absolutely, you can, because there are stocks out there that are under $10. My experience has been, when I looked at those stocks that are under $10, though, is that there wasn't a whole lot of room for income on those. I felt like like when I look at and I use Robinhood, when I look at my I have a list that it goes and it looks at the most volatile stocks that range between $20 a share and $50 a share. And so what I do on Monday is I just go through and I put those top ones in my little spreadsheet, and it tells me which ones are going to give me the most profit. And
That's right.
sometimes 10%. I mean, I actually did one, it was like 17%. But and the other thing, Errol, and I'd love for you to talk about this. I'm not married to a stock, right? So if it gets sold, I just let it sell and just do it over again, right?
That's right. That's one approach. Another approach is just sticking with a handful of tickers that you're familiar with. You know how they move. You know what kind of returns they provide. I really only trade maybe 4 to 7 tickers. I'm really running the same plays on the same 4 to 7 tickers.
Right.
Right. So I know what kind of returns they provide. I'm not gonna jump into a new. Really, the newest ticker I'm trading is Mara. And even before I started trading Mara, I had that on my watch list for a few weeks or a month just to see how that was performing, what kind of range it trades in. Then I pulled the trigger. I didn't want to jump in at an all-time high, buy the shares outright, and then realize after the fact that I bought too high.
Right.
Mm.
So that's why even though I'm only trading 2 different stock at a time right now.
That's okay. That's
I
fine.
go and I'm watching about 7 of them on my spreadsheet so
Yeah.
that I can see, how they're moving and that type of thing. But I do think that there's another thing that you mentioned. If you do have some of the blue bloods like the Apple, I know you're big with Tesla and that type of thing, is setting your strike price high enough so that those shares don't necessarily get sold away. So you're
Yes.
in long
If
term too.
That's right. If your objective is to keep the shares long term, then you pick a higher strike price. If your objective is to maximize cash flow, then you choose a lower strike price. Or if your objective is somewhere in the between those two objectives, then you pick a strike price in between.
Yeah. And that's why I kind of like my 5%. I mean, like, shoot, I could live with 5% a month because Michelle, I can do math, right? 5% a month times 12 months, that's 60%.
Right.
Where can you go and make 60% on your
60%.
money?
Yeah.
I mean, that's better than Buffett's returns. I think Buffett in his heydays was putting up like 20-25% year after year. So if you're doing 60%, if you could do 40% year after year, you're in the Hall of Fame.
Wow.
Got it.
Good job, Tony.
Yeah, I'm just playing around with it. I'm learning.
I
I'm still
know.
learning.
Y'all,
You guys,
he playing around with it, but he ain't shared it.
well, because I need to know, I need to kind of, really know what I'm doing before I share. But I recommend everybody kind of jump on, Errol's. It's a great place to learn
It's called.
and get familiar with the technology or the terminology and all those types of things, because that's where I'm learning. I'm learning by listening to that, being in part of the class and that type of thing. So I'm still a baby in it, but I enjoy listening to some of the more complex things that people are doing, and you learn a lot. Now, the other thing that Dr. Boyce Watkins talks about all the time is that he is big on real estate, but he's even bigger on this. And the example that he uses, and you can kind of help me out a little bit this way. Let's say if you have a $300,000 house. If you have a $300,000 house, how much can you rent that house out for? What would that rent for in Kalamazoo, Michigan?
Let's do it one step further. Say you have a property in New York, in California, or in Florida, right? Those are the top 3 most expensive states for real estate. Just assume your rental properties in one of those states. What's the highest rent you can command in one of those 3 states? Maybe just say your property's in Manhattan.
$4,000. Let's say $4,000.
$4,000. So your $300,000 property is returning you $4,000 every month, right?
Mhm.
If you
Uh,
own it outright.
that's right. That's
True.
right. So one thing you would have to consider is all the expenses. Subtract off all your mortgage, your
Mhm.
maintenance, maybe your
Utilities.
property management, your insurance, all those expenses. So whatever net cash flow you're left with at the end of the month, that's what um, that's what your net cash flow would be. But that if you took that same $300,000 and it maybe invested in a safe ticker, maybe like say Microsoft, your return would be much higher than say 2,500 or 3,000 a month,
Yeah, it'd be
and less work, and less work,
And less
and,
work.
and
double
less work.
that. No headache, no tenant.
No tenant. I mean, over the years, I had tenants call me for all kinds of things, and I realized that's not my. I realized with the options game, it better aligned with my natural skills. I'm not that handy. I can't fix HVACs. I can't fix water heaters. I can't really fix this. I'm not, I can't really, I can barely screw in a screw. So that didn't really align with my natural skills. I'm a numbers guy, so um, calculating my ROI or calculating my cash flow is much easier. And I can do that from the house. I can do that from the beach. I can do that from the coffee shop. I can do that on vacation.
Awesome. That's good.
Yeah.
So go ahead, Michelle.
No, that's good because
Well, once again, let's. I think we got your email in the chat there. Anyone who wants to come and jump in and listen on Sunday, the first Sunday of each month, 5:30 p.m. Eastern time, and I think you're in Florida, right? Are you down in Florida?
Yep, Pompano Beach. Pompano Beach is heavy on your call tonight. Yes, I'm down here in South Florida.
All right, gotcha. So Errol, just as we are closing out, what one piece of advice would you give someone who's listening tonight and they said, "Wow, I would love to get into it, but they don't know what to do
Yeah,
next."
learn the options game. Add this weapon to your toolbox. Add this on top of your primary business. Add this on top of your day job. Add this on top of your side hustle. Add this on top of your real estate portfolio. So you have a whole toolbox of weapons. At that point, nobody can cancel you.
Multiple streams of income.
multiple streams of income.
Multiple. Actually, I've been taking this from you. I heard you say one time multiple rivers of income.
Exactly.
I like that better. I like that better.
Yeah.
Because they
We
got
don't
a
want-
flow.
They got to flow. They can't just trickle in. We want
They
them to
can't
flow
trickle in.
That's right. That's right.
And-
Multiple
and-
rivers.
Yes.
And we want to make our day job our side hustle.
Side hustle, right.
I love that.
That's right.
Well, Errol, man, thank you for just taking some time. I've really been wanting to do this and just kind of get people excited about this and get them to do research. And again, we can't emphasize enough, do your research because Errol does it different than me. Other people do it different. I mean, you got to find what philosophy works for you. You can't really copy someone else's. You learn from them
That's
and you
true.
ideas, but you got to learn what philosophies work for you in your situation. So with that, y'all just tune in next week. We're going to continue to bring you some great financial education in
That's
April,
right.
being Financial Literacy Month. Hope we got you off to a good start. Make you think, I need to start looking into this. With that, everybody have a good night.
Good night.
Peace, everyone.